Can't help
Hey guys, my name is Emily Bush. I'm going to be the moderator for today. I'm a general partner of a fund called Decentra Capital. I'm also one of the founders of Shios, which is the only female-founded mining company on EOS. And I do advisory work for a couple other projects. Can everyone kind of go down the line and introduce yourself, talk about what you're working on, and then give me a little bit on what are you most excited about?
Absolutely. So, hi, I'm Justin Newton. I'm the founder and CEO of NetKey. We've been working in this space close to 5 years now. And we've been primarily focused on building tools to help with the mass market adoption of crypto and blockchain. And so what we've been working on most recently is tools to help automate identity validation. So KYC, AML, accredited investor validation, all that other stuff that people need when they're building out either platforms or getting ready for a token sale, security token offering, et cetera. In terms of like what I'm most excited about right now, it's probably that a lot of the projects and platforms that we started working on in like 2016 and early 2017 are actually coming into the marketplace now and starting to get some usage. So that's probably the most exciting for me. I like users, and so it's fun to be there.
Blockchain users. Hi, I'm David Moss. I was the employee number 2 in the United States, and actually overall SVP of Tech Ops for Block 1 building EOS, left in May to be on the outside and do the EOS launch, and did that in June, started a company called StrongBlock. We're in stealth. Basically, the idea is that we believe that there's a need for enterprise-grade blockchain out there, and we're working on a 4th-generation blockchain suite and protocol. And I think the exciting thing for me is similar. Basically, it's 2019. That's the year I'm looking for actual real adoption to start. Right now, it's all just crypto adoption. I want to see real blockchain projects out there, and I want to be a part of that, but that's the thing that I'm excited about.
I'm Ty Cody. I am a co-founder of the Crypto Watch. I'm also the in-house technical analysis. I'm kind of the market guy and the trader. I'm most excited about maturing charts because we're still so early.
Hi, my name is Jeff Flowers. I'm with Go With Me. We're building a decentralized mapping ecosystem for the emerging markets. I think what I'm most interested about is using this technology in underserved communities and markets.
Hey guys, my name's Stephen Mackey. Sorry, came in late. But my name's not on that panel, but I am the founding partner and chief crypto economic systems engineer at Momentum Capital. We are a hybrid crypto fund. We do both VC and crypto investments. And part of my job is like being the lead sort of like technical specialist to be able to dictate and figure out which of these projects are actually going to be like fruitful over the long term and invest in those accordingly. I've been in this space about 6 years, advised about 7 different companies, worked at Purse, have a news publication called Block Channel, some of you might be familiar with, and I'm just here to sort of like meet people and sort of like grow with the cryptocurrency community and maybe educate some folks.
Cool. So I'm going to take us through a little bit of a brief history. So first generation was Bitcoin, 2009, created in 2009, and the core usage was store of value. Then we had Ethereum, which was second generation, had its crowd sale in 2014, raised $19 million, and then launched in 2015. And the main use case was smart contracts. Now we're in third generation. What is third generation? Third generation could be EOS, which raised about $4 billion and did a year-long crowd sale. It could be GoChain that raised about $16 million that kind of looks a little bit more like Ethereum. But what is third generation? David.
Oh.
Let you kick it off.
Third generation, I think it's the common, again, if we're just looking at generational stuff right now, I think that there are a number of things. I think that GoChain probably does fall into that general area, but they're building on Ethereum, but they've done a lot of improvements to it. There's a couple of other projects, one called Ergo out there, and some other things that are really just trying to make the combined, I would say it's the combination of store value and smart contracts and intelligence and performance. And then EOS and some of the other groups add some other things in there like the ability to have different kinds of accounts, the ability to freeze accounts, delegated proof of stake versus proof of stake. And that's kind of how I'm looking at it. But there are a lot of different protocols out there. Just that EOS is the most prominent one out there right now. But there's a lot of really good things that I've been seeing.
Justin, what do you think?
So for me, I would almost argue that we're still maybe in the late 2.0 blockchain, because a lot of what we've seen with the things that have come out recently aren't necessarily dramatic changes in the functionality. It's taking a lot of the functionality that was there and making it faster, or some other things around that. For me, I think what will probably define the third generation when I look at it is going to be much more usability around smart contract programming languages and other things like that, that we can draw from much broader development ecosystems than we're seeing today, and maybe some safety rails around some of that. And then, taking the performance that we're seeing in the generation of networks that are coming out today with what I would maybe call the 2.5s or 2.8s, but taking that performance and then building back in some of the censorship resistance and security that we've seen in the first generation of blockchain models, that I think in some ways was weakened a little bit to get us the higher performance that we're seeing now.
Stephen?
Yeah, so I think where we are as far as generationally is we're in this weird, not really this third generation, more in this kind of this 2.5, where we still have some of the original platforms like Ethereum and et cetera that are reaching a point of maturity as far as their scalability, layer 2, those sorts of interactions with state channels, things like that. And then we slowly see those innovations move their way into different other assets that are also EVM targeting, et cetera. So, right now we're still making the kind of the main base layer as hardened as we can and more resilient. And then, but with that, we see other competitors that are coming off that are looking to claim that, we're the next version of this smart contract, ecosystem, whether it's Definity or what have you, and we have this higher transactional throughput and all that, which is fantastic. And depending on how you look at those, particular parameters, and in how you benchmark those cryptocurrencies accordingly, and you say, oh, this has a faster transactional output. But does it have a rich state? Can the system itself be synced easily? Can it be more easily run on different lower power devices and things like that? There's these other folks that are screaming that we're the next, but they're going to find that their foundation still needs a lot of work. And so what they're really doing is they're subsidizing, the future throughput and additional capacity for Ethereum. So what we're actually seeing is a lot of these different concepts, things like Coda protocol and ZK proofs, to scale transactional capacity. Now we're seeing that getting borrowed over to Ethereum with ZK snarks and them experimenting with those technologies. We see folks working on beacon chains and those sorts of things, and sharding and other things present concurrent, parallelized, compute, Art chain, things like that. All these interesting things can be implemented in pre-existing systems. It just takes a little bit of time, and the great thing about it is those systems are already more easily distributed. They already have exchange support. They already have users. They're already well-known globally. So what you're happening is we're going to see a lot of co-opting amongst all these different groups that are from these different new generations. In actuality, what we're really going to build is the actual foundation, what we were trying to do all along. They just don't realize it yet.
Jeff, what's your thought? I know you're more of an Ethereum guy.
Well, I definitely think that I believe in a parallel chain world. And I don't know what blockchain 3.0 looks like, or blockchain even 2.5 or 2.81, a little higher. I have no idea, but I know this. Where the developers are, that's where we're heading towards. So I would say keeping an ear to the ground, understanding where the developer community is building and growing. That's probably the best determinant as to where the space is going. But right now, most of the developers are in certain camps, and the big, 900-pound gorilla is, of course, Ethereum. So I think we're going to see that for quite a while. But there are lots of work being done with EOS that is really quite fascinating, primarily because I know C++ a little bit better. So I don't know, but it's really hard to tell.
Yeah.
And Ty, how do you see this show up and play in the markets?
Say that again?
How do you see this show up and kind of play out in the markets?
Can you say the question again?
Yeah, kind of as we talk about all levels of generation of blockchain.
Okay.
How are you kind of seeing that show up in the markets? Are you seeing there be a strong affiliation for protocols? Are you seeing there, how are you kind of seeing the whole story play out, but from a market perspective?
From a market perspective, besides early adopters, I would say most people trading or trying to get in aren't paying attention to the background tech yet. It's kind of you guys are brilliant at that, but I don't think like the masses are paying attention to that. So if people are getting in with like fresh money or investments, this is more of like a market move.
What are the masses paying attention to?
That is a great question.
The masses are paying attention to those that actually can clearly and cogently explain and educate their users on what they're building. Not just like, we have high throughput this is decentralized that, but this is how this works. Here's an application or a use case for that. Let me show you how that improves your life. And then explain that, and then you'll take that and carry that on to the next individual. And
But
so
when you
so
say
forth.
the masses,
Well, I was just going to say,
Generalized consumer, retail, individual.
generalized consumers don't know anything about this at all.
that's what I was going to say.
I walk around my neighborhood. I go to parties
just
and I
gonna
talk
say,
with people. It's like, I say blockchain. They go, what the hell is that?
Which goes back to my point of education. Those that are best at education are the ones that will garner the most adoption, right?
Well, I don't know about that. I think that if you solve a problem, a real problem,
Yeah.
they don't
Yeah.
care it could be anything. It could be X, Y, Z. They have no idea, no care. Solve a problem.
I just don't think that there's any blockchain problem, any consumer problem being solved by blockchain at this point. And so there's just very little,
But what particularly do you mean when you say a consumer problem being solved by blockchain? Because that's really a very broad term. When you say blockchain, do you mean cryptographic assurances, like crypto economics, like generalized incentive mechanism design? Or do you just say, what do you mean by blockchain, a linked list? I don't know what you mean, and I'm not sure you do either.
Well, I would say this. Okay, I'd say this. Blockchain is
really?
great for multi-party killer apps or payments, micropayments, re-envisioning these kinds of easy use cases.
Do you have an app on your iPhone or your Android phone that connects to the blockchain?
I sure do.
And what does it do?
And I'm the advisor of that. So Cent was the very first social network to come live on the Ethereum network last August on the mainnet. And we've actually just recently released our state channel applications, which allow us for throughput to actually have Web 2.0 UX and introductions. And I actually use that every day, and it's the most popular app on the Coinbase wallet.
It is.
Give me another one.
EOS Links has 11,000
EOS
users.
uses decentralized proof of stake, and it uses a cartel
No,
methodology
EOS
in order to govern itself.
Okay, I'm gonna
we're getting off
steal
track
back
here.
the mic, even though I literally can't steal back your mics. So clearly, we're starting to talk about adoption. We're starting to talk about where we're seeing, quote unquote, the masses. So what do you guys really see as, what is it going to take to win the protocol race?
Interoperability.
Interoperability and sustainability.
Yeah, interblockchain, we're calling it IBC, interblockchain communication.
Having developers build an app on top of your blockchain that gets people super excited and using it. I mean, really,
Adoption.
It's adoption. You need to
killer app.
find that breakout application that's going to get people using it and start to drive the adoption and get the flywheel going. And in the absence of that application that people do actually seek out because they seek out its functionality, not because it's the same thing that they were doing elsewhere except on the blockchain. Until that app exists and starts to draw in 1 million, 2 million, 5 million, 10 million users, there's no other way to win the protocol war, right? And so if you're building or designing a protocol or a new blockchain now, what you would want to think about are what are the attributes that developers are looking for that are going to differentiate your blockchain both from other blockchains, but more importantly, what's going to allow them to differentiate their application from an application that wasn't built on top of a blockchain. So that when they release that in the App Store, people see the clear differentiation that's there because of the application differentiation and not because it runs on EOS or runs on Ethereum or runs on whatever it is that it runs on.
That's the killer app, is one that's out there that brings something new, but people that don't even know that it's running on the blockchain. They have no idea. It just is running, and everybody's using it. And I haven't seen that yet, and I'm really excited about seeing that soon.
So what do you guys think about scalability and governance playing into that?
Scalability and governance are things that kind of work in tandem, right? So in order to have scalability, you have to have good governance, and governance happens in a multitude of different ways. So in the cryptocurrency ecosystem, you've got speculators, you've got cooperatives, foundation members, and technical evangelists, and then you have hardcore low-level researchers, things like Starkware, things like Zcash Company. Essentially, there's this funnel, and our jobs as capital allocators, right? Efficiency is to widen this funnel and to create speculation and to create opportunity. right? When we create speculation, we create opportunity, we allow for like more individuals, more mind share to come into the space and eventually get themselves educated, have the means in order to do whatever it is and build what they want to build, what have you. So basically, we start here with the speculators who have this very wide funnel, and then we move down into like your evangelists, your cooperatives, folks in foundations that are like basically spreading this technology, educating individuals so that it can actually garner adoption. And then finally we make it to like low level, like researchers, things like that, which basically help like scale the scalability of the blockchain, improve its tech, improve its throughput, its security, its resilience, et cetera. So like there's like multiple facets to this. You cannot have scalability without good governance. You can't have scalability without good governance with bad governance, but you won't be able to scale as efficiently, and you won't be able to move against like your different competitors that will have that advantage, that can govern themselves more clearly and efficiently, right? So when you start with a bad base, a bad governance base, something like decentralized proof of stake, right? You basically have just taken this vitriol and this concept of like people not actually being able to work together efficiently because of the game theoretic holes that you've put into place because of your governance system, and then therefore you have this technical debt by design, and you actually will never actually reach where you want to in comparison to your other competitors.
So I think there's a difference between efficient governance and good governance.
There is,
right?
Clearly.
Because, and I think that what you might be arguing about is efficient governance versus good governance, because I think all of us would argue that Oracle has done a great job of creating scalability of a database.
It's more so governance.
None of us would argue that they've done a great job on governance.
It's more so governance
right?
and being able to understand like the crypto
And then
ecosystem as a whole.
I'd also argue that if you look at what's happened on the internet, 99.95% of application developers don't care about your governance, right? What they care about is, can they build an app easily?
They don't care about your governance, right?
Does the app scale well? Are they able to distribute it to users in an easy way? And so I do agree that governance is very important, but I actually don't think for most application developers it's going to drive their decision making, because it hasn't in other realms.
Yeah,
right?
like the governance for decision-making processes around like the software development lifecycle, right? Like sure, like Oracle has that down, et cetera, but we're talking about like natives here, like in this ecosystem, right? So like we're like, how do you like build efficient systems where like these like people will actually be able to like come and like do what they want to and not have barriers put in place for them like to be able to like enact like efficient changes or
So
innovation technologically.
Maybe we need to define, you were talking about scalability, and when I think scalability, I think of the ability for a system to grow and be able to take on a lot of users. When I think of governance, I think about voting systems, I think about smart contracts, adjudication, arbitration, various things like that, and I think that those are kind of the fundamental building blocks of blockchain anyway, because in a decentralized system, there is no head. There is no, Satoshi is out there somewhere. She is probably having a great laugh at all of this, but there is no CEO of Bitcoin, right? And so I think that that's kind of the governance part, is that people, especially enterprises and other organizations, want to know that there isn't the ability for people to collude, to be corrupt, et cetera. And governance ideally provides that kind of a structure that allows us to know whether or not everybody is being transparent about their ownership of their nodes and various things like that, know that they're not doing data exfiltration to pull things out the back door. And I think that, so on the governance side, for blockchains, it ends up being very important and different, because it literally is like its own small country, and you have to figure out, well, what are the rules in that small country?
Well, see, okay, so there's two different types of governance, right? There's social governance, and then there's like technological governance. By technological governance, I might mean like your processes and approvals for like maintainers, being able to merge pull requests into things like Linux in that ecosystem, right? And then I have like the social scalability, the social governance around like individuals and entities, and like how things eventually become into play and become a rule in the system. For instance, like layer 0, right? The Bitcoin improvement proposals, the Ethereum improvement proposals, these nice technical conferences, going to DevCon, which is coming up. That's where the layer 0 of governance starts. Then it attenuates outward. Then it comes to layer 1, the consensus mechanisms, the actual systems and designs themselves. Then we go further out. Layer 2, it attenuates. Everyone is dependent upon each other, and you cannot talk about scalability and governance without talking about them together.
Well, how
It's a longer conversation.
I wrote a 4,000-word manifesto on it. You can read it.
Yeah, because
Feels like Jeff, you might have something
I had,
to say.
I did do, but I'm just, I'm like, whoa, boy. Okay, so I was going to say, with regard to scalability and governance, I think governance is something that we really don't understand very well. I do know this, that depending upon your use case and what you're trying to accomplish, different governance models are going to be a better fit, but I think right now nobody knows what the secret sauce for particular use cases are. So it's really experimental. So I think it's going to take time before these experiments play out and we have a better understanding of what works and what doesn't work and in what domains. As for scalability, again, I honestly think the scalability problem has been overblown. I think there are tools out there, and we're going to see them rolled out sooner than later that will fix them.
Well, yeah, and that's one of the things we're talking about backstage, too, is that there's a myth out there that Visa's transactions are like 24,000 transactions a second. It's around 1,700, so that means that very many blockchains out there are already surpassing that. And so you've got a lot of that part of it. The speed is there, but then do you have, again, the governance and all of the other components there? And they're just not all working together yet. And I think that is. So I definitely do agree that you have to have those hand in hand. If you're going to scale as an ecosystem, you've got to have all those different layers of governance and figure out, what do you have at the top and does it rule what's at the bottom and all of the other various components, like it is like a small city or an actual country. And then it really is the overblown, the whole idea where you have somebody told me today about, well, they've got something that goes 10 million transactions a second. And I said, why?
Yeah.
It's like, what application needs to run on that? Maybe Internet of Things.
So what is the most ideal? Like, what is the most ideal transactions per second? Because you have Hashgraph coming out saying a crazy number. You have
What's your
GoChain
business
right
case?
now that can do around
What's your use
3,000.
case? If you don't have the use case, then it doesn't make any difference. If your use case is, I want to be able to do Visa on the blockchain, then there's a couple of really good answers out there already.
And when you say things like 10,000 transactions per second, do you mean like 10,000 like direct like person-to-person like transfers? Do you mean 10,000 state transitions? Do you mean like, what do you mean?
Are you thinking centralized or decentralized? Are they P2P transactions or are they going through a central processor?
Mm-hmm.
Yeah, I think you really have to start with what's your use case, what are you trying to accomplish, and then build around that.
Yeah. And that's exactly where it's going to go.
Yeah, I'd 100% agree with that. I mean, I think scalability is just a technical problem, which means that if we never talk about it on a stage like this again, it's actually going to get resolved, in approximately the amount of time that's required to get it solved. Maybe a few weeks too late, maybe a few months earlier than we need it, but kind of approximately on that time frame. I would way rather focus a lot of our time, energy, thoughts, and attention on what are the things that we need to do so that we run into the problem of scalability. Yeah. Let's get enough people on the system that we can come up here and be like, oh my God, there's so many people running so many things that we can barely keep up with it. What do we do?
Well, it's like Woz earlier when he was talking about the thing when they first got 100 people all talking together on one network. It's like that was a big deal at the time, right? So.
And look, I remember I was a network engineer in the early days of the internet. I remember the time when the fastest routers coming off the line we knew were going to be obsolete in 6 months. I remember that time, and I look forward to that time happening again, but we're not quite there yet.
Yeah, the hype is way ahead of the actual adoptability right now.
So when we actually look at where users are using, it takes us back to betting, porn, and drugs.
Yeah, the big three.
The big, that's right, the big three. Where do you see the first real adoption outside of those three categories? And I include gaming in there as well. Where do you see that really happening?
Sure. I mean, there's a few we see happening already with some of the partners that we work with, but it's happening, frankly, mostly outside of North America. So what we see is, remittance and international payments. We see a decent amount of that happening in Southeast Asia with a number of different companies that are competing in the space. And, they're definitely not moving Western Union volumes yet, but it's real users using it, not crypto enthusiasts using it, which is something that's pretty exciting and interesting to me. One of the use cases that we're working on with a company called Bit down in the Caribbean is really exciting because the country that they're based in is in Barbados, which has a 20% banking penetration, but 140% cell phone penetration. So by using some of our tools where we're able to move the onboarding directly to the user's mobile phone, and then they've gone out and worked out relationships with several of the central banks to digitize fiat on the blockchain locally, they're able to go after that financial inclusion problem on the islands and the local islands. Additionally, right now in that area, a lot of the money, if you try to send money between islands, has to go through either New York or Toronto on the way, because that's where the bank's headquarters are. And so you have 2 international wire transfers and 2 foreign exchange fees, where you can literally, like, you could put the money in a coconut and throw it between the islands. And so, you know, that doesn't like work well for anybody. And so the combination of being able to keep the currency local and do all that exchange local without, frankly, like the economic colonialism of North American banks, and then also the financial inclusion aspect. The Central Bank of Aruba did a study on this project, and they predict that at its full implementation, you know, this could raise the GDP of the region by 3 to 4% a year. Wow. And so for me, that's an incredibly exciting use of blockchain, even though it's not like an esoteric, you know, decentralized thing, but it's something that we can do in the short term that changes real people's lives in a material way. Yeah. So that's one that's on the horizon I'm really excited about. Yeah.
Well, and I think that that's great, and I want to just add on to that. I think remittance and the unbanked is a huge area where peer-to-peer transmissions of remittances make literally drop down a whole bunch of stuff. Talked with a group that was actually working on not just remittances, but paying foreign workers in volunteer organizations or in worldwide organizations, and their fees were astronomical. They were talking about literally saving themselves $50 million a year in fees just by going to that. But the thing that we're talking with a lot of people right now is supply chain, and we feel like that's one of the earliest areas. I spent some time earlier this summer with 30 Fortune 100 companies, and everybody there agreed that supply chain was the big one that they're working on. All of them had some proof of concept projects they're going on. You've probably heard about Walmart actually literally demanding by, I think it's February of 2019, that you've got to be on the blockchain as far as a participant in their system, or you're not going to be able to put anything into any of their stores. And so there's a lot, you can see a real movement of demand there, and part of that is the transparency that you get by knowing every step, the provenance of every step along the way. So I think that's going to be one of the big things in 2019. You're going to see real world systems working on the blockchain.
Yeah, I definitely do, like, you know, payments, remittances, things like that are going to be huge. And, you know, that was the very first use case that we got excited about with Bitcoin, right? And, you know, you posed the question pretty well when you sort of like said, like, you know, you listed vices, right? So there's this like the inelasticity of vices, whereas like if a system can be exploited to be able to take advantage for a human to like go to seek a vice, then they'll do so. So, you know, we already saw that with like the Silk Road and drugs, a story that you've heard time and time again. And then we can move to gambling, which has a lot of regulatory controls around it, which makes it difficult, but folks still sort of do that. And so the only other option you have like that is like things like adult entertainment, right? Like the adult porn industry, and we've got great projects in this space like Spank Chain that are utilizing like state channels and working to like build and empower things for like sex workers and for individuals that are actually marginalized and actually do provide a use case, but also the money and the payments use case as well. But also like the decentralized, like uncensorable like aspect of being able to make payments and stuff. So if you kind of look at it, drugs, that didn't work out well, we know that. Gambling, a little bit difficult. Major players will be able to like sort of like play with that as they can, but it will come to life when that is mature and laws are a little bit more looser. So it leads things like generalized payments and porn. And if you can combine the two,
yeah, there you go.
That sounds great, right? So I mean, basically, so it's like, but it's funny because you would think that like talking about uncensorable money, talking about all this stuff would like get folks excited, but like sometimes you just gotta like speak to the most primal aspect of a person and just say, hey, you can spend money and you can enjoy this thing that like it's an uncorrelated. Sex is an uncorrelated asset class. It's not going on anywhere, and it's only going to continue to get greater in demand, right? So it's just like if you can build sound money systems on top of that, if you can build decentralized systems on top of that, and like augment it out and like take away all the negativity and just make it good and remove the stigma, that's great. We can scale cryptocurrencies, we can scale adoption, but at the same time, we can do social good. And that's the cool thing about cryptocurrencies being multidisciplinary by design in these systems, is that we can actually touch multiple different industries at once and make vast improvements.
Disintermediating pimps is
exactly, that's it.
Well, to follow up with that, I mean, I think for getting into this in the mainstream, you got to solve a problem. Mm-hmm. And, you know, another primal urge that I'll talk about is not porn, but traffic. And so, you know,
we all hate traffic.
We all hate traffic, right? It's a primal urge. So, you know, one idea is to use this technology to incentivize the creation of great quality maps and data, real-time data as quickly as possible in the emerging markets, because I definitely believe this technology is not limited to one place. It's not in the Western world. It's going to really come of age in the emerging markets. We're going to see a tremendous amount of growth potential there. So I definitely agree. Go for primal urges. It doesn't have to be porn and gambling. It could be others, like
Well, that was
wanting to get
VHS
home
versus-
quickly.
That was VHS versus Beta, right? VHS won because the porn
Exactly, and
industry
Betamax,
adopted
and now we're
VHS.
seeing
Yeah.
the adoption of like VR too with that, and sort of the emerging of like Silicon Valley and like LA and Hollywood and those sort of two. It's great. It really does bring industry.
Justin had a great point, and I think it was that the adoption, when you're looking at people 20% banking and 120% phone use, you see those kinds of leapfrog things in a lot of markets when that happens. And I think those are the markets that are actually going to adopt blockchain faster, because they can leap right onto the phone and have a blockchain there. I think that there's going to be a lot less in some of the other markets that move slow, and it's hard. How do you dethrone the Apple App Store? How are you going to do that?
So Ty, when you kind of look at the markets, and we kind of talk about those three sectors, like where are you seeing the speculators speculate in terms of type of companies, types of concepts?
I mean, again, with a lot of the market movements, that I monitor are, kind of based on like what's happening in media per se, not even like right down to the specific classes or what it's doing. Mainly kind of like what happened last year, for example, like that huge parabolic move that we all saw. That's not normal. You know what I mean? Like obviously it's not normal. Like I've never seen anything like that before, and it's like it happened right at a time where, people go home for the holidays and Thanksgiving and Christmas, depending on which you celebrate, whatever it is, and then we go parabolic, and it's all just kind of hope. There's no like real reason behind it. I know it's kind of deviating from your question, but like just watching that all unfold, it's really interesting because it goes back to like markets primal. And it's kind of like human. It's just human psychology in markets. It's greed and fear.
Yeah. Hope, greed, fear.
Hope
That's
and
the
greed
cycle.
and fear. And the problem is that a lot of people don't understand markets are just one giant cycle over and over and over. So it starts with accumulation with smart money, people that are early adopters, and then you get people coming in to where now it's like greed. You see the headlines. Oh man, you need to get in. Or your friends and family, like at Thanksgiving, for example, or any, towards the holiday.
Last Thanksgiving. That's
Yeah,
what's
I
going
mean,
on.
like, so that's what, like, Aunt Susie made 200%, on $5,000 she put in Bitcoin, and she didn't even know how she got in there. Like, like her kid had to like tell her how to get into it or something, It's like, it's not normal, right? So when you hear all these things, when you hear people that don't belong, not saying that they don't belong, but when you hear people that like aren't normally in something like that, and they're ranting and raving because their returns are insane, like that's a huge red flag. It's not normal, so it only just makes it worse because it happens faster and faster and faster, and then obviously it becomes a thing where it's not between family and friends, it's now all over the media, because it's like, why? I mean, I could say it's, manipulation, whatever, but you know what I mean? Like it just expedites all of that, and then everything goes parabolic, and then it turns into like distribution, so another cycle. So you have accumulation, your greed, your distribution, where that's kind of where everyone's like, oh, I don't know if I'm like too late or too early, I don't know what to do, and then it's like panic and fear because everything just starts crashing, and like people don't understand that. It's all like you said, it's.
Well, you do. Then it's time to buy.
Say it again.
You do. Then it's time to buy.
Yeah, I mean, when there's blood in the streets, yeah, I mean, like that's when you're feeding, you know what I mean?
I think
but like
Warren Buffett was the one that said when he got
When
in
other-
a cab and the cab driver started telling him what stocks to buy, he was like, all right, time to get
Oh
out.
my, okay, so it's funny you say that. It's funny, I have a story about that real quick. So this is great. So back in December, like I'm more of like a trader, I scalp. I'm not like long-term in anything, but I knew a few of my friends that were long-term. And I told them like when this parabolic move was happening, I was like, you need to get out, like this is not gonna end well. And they're like, yeah, no, but if it just keeps going up, like, I'm like, oh my God, it's like talking to a brick wall. Anyways, I remember being at Starbucks specifically, and this person was talking about crypto, and they had sounded completely, had no idea. They're like, I just heard about this Bitcoin thing, and I don't know anything about it, but I put some money into it. And as soon as I heard that, I literally was like to my
Sell.
my one specific friend, I was like, bro, dump it, like it's not gonna end well. And that was like right at the end of December too. And I'm like as soon as I heard it, like you talked about, like the grocery or whatever, wherever you are, when I heard that, that's when I knew we're like, oh, we're in bad.
It's a
we're,
big market.
It's a bad.
It's
we're
a
in a bad
signal.
place.
Well, if you watch the other side of that, though, maybe 6 months earlier, just before the run-up had started, I was in a Lyft on the way to the airport in Boston from an MIT Bitcoin conference. And in the 25 minutes that I was in the Lyft, I always chat with my Lyft driver. I get in the car, I'm like, oh, hey, how's the Lyft working out for you? He's like, oh, good, but I only do this on the side. I'm like, oh, what else do you do? He's like, I run a crypto hedge fund. And over the course of the next 25 minutes, I was completely unable to convince him of the possibility that theoretically crypto could go down in the long term.
Yeah.
That, even theoretically it could happen. I couldn't get that through in 20 minutes.
Did you ask him
And
who his
so
investors were?
that was before the run-up really started.
Yeah.
There was still a lot of
Maybe he
room to
got
go.
in and
So
got out.
apparently, yeah, you
But-
never know.
And that's the other thing too. All the people that did get in and they made crazy gains, or they're up 200, 300%. Those are also the ones that aren't educated enough to and it's not even educated. That's greed. They didn't sell.
Yeah.
So it's like in trading, for example, there's always okay, you identify your setup, right? You take your position, be right, but there's the final step, and that's to
out.
sell
Get out.
it, take your profit. Because when it's on a screen, they think it's there, but it's not. It's very easy to look at money on a screen and think it's real and it's in your account, but it's not. Until you close that position, that is not your money.
Well, I think you're also talking about just the tangibility of stuff. I think that's what we're all talking about, is that there's some just real stuff. There's a lot of people that are speculating on the future of blockchain, the future of crypto. And what we're talking about here is we're looking at how do you actually make this stuff work? How do you actually make it a real investment vehicle? Because you can. How do you make it a real, actual, adoptable identity platform, a real adoptable blockchain? Because you can. And then focus on getting those things done. And I think that that's what I'm starting to see, is that when everything dropped down and we're now in crypto winter, it's like, okay, well, the people that went out there and bought themselves nice heavy coats and everything else like that, they don't get eaten by the death walkers, and they're great.
So we only have a couple more minutes here, so I just wanted to kind of look into the future. So what, and everybody kind of has their own specialty here, so I'll let kind of you take the question as you want to take it. But what does the future look like from a market standpoint, from a generational blockchain standpoint, from a dApp standpoint? I was sitting in a dear friend's house the other day, and we were like, what will be the next thing to test the protocol layer blockchain? Will be Tinder for CryptoKitties.
Yeah.
What will be
That's
the thing
it.
that will take off? What does the future look like? I'll let you start, Justin.
Sure. Look, so in my case, when I look at this, and the frame I bring to a lot of stuff is the early internet, which is where I started my career. But if we looked at the internet, we're kind of in the squeaky modems and busy signal phase. Yeah. We're still in the very early adoption, where it takes 25 minutes for the picture to get loaded inside of your web browser. And so the kinds of things that are getting built now are the emails of blockchain, those kinds of things, because those are the obvious first steps. And I'm really excited about those things to happen, because I think just decentralizing those things creates quite a bit of power behind them. But I'll be honest, what I'm most excited about, and I think I chatted with this briefly backstage, is there's a whole group of people that are growing up right now who in 10 or 15 years are going to start developing on this, who aren't going to have the same blinders that all of us have, because we grew up inside of the existing ecosystem and existing world. And so even though blockchain has removed a bunch of walls, a bunch of them we still see even though they're not there. And so what I'm excited about is the people that have never seen those walls, so they don't still have phantom walls there, start developing on top of this, and we start getting the really out there stuff, which, stuff like we never saw Airbnb or Uber or, frankly, things like Pokemon Go even, or stuff like that, coming when we were building the early internet. I don't know what those things are going to be for blockchain, but I'm excited to build the platforms now that let those exist.
Well, I'll be really brief on that too. I think you're talking about, there's a book called The Structure of Scientific Revolutions by Thomas Kuhn, and that's the entire thing. It's paradigmatic science about these big things where people are coming into it and they don't have all the people around them saying, well, this is the only way you can look at this. I don't know what the next big thing is. I'm really excited to find out what that really killer app is, because who saw Uber and Airbnb coming, and crowdfunding and all the other stuff, and just a handful of people. That's what I'm looking for, is something is going to come out in the next couple of years that you're going to go, oh my God, that's the perfect application, and I don't think we've thought of it yet.
I think what's going to happen is like you have this constant feedback loop, right? Whereas you have something that's like a hit, like CryptoKitties, and we're like, oh, cool, this is awesome. Like we can show, like we can make non-fungible assets. People want to collect them, they want to play with them. It's like Pokemon, and then people get really excited about it, and then we congest the network, and then we're like, oh shit. And then then we learn the network scales, but only up into a point for this particular use case. So then it's like, okay, do we want to reuse this use case in another means? Okay, if we want to do that, then we're going to need to make sure that we provide and provision the services and the infrastructure to help that. So whether that's state channels for these state transitions, whether it's da-da-da-da, and then by building that infrastructure and those tool sets, that will lay way for like the next major application, and then we'll digest that, and then distill that down, and then from that we'll build the tools and services. So it's like, it's gonna happen progressively, and the evolution of it is gonna move. What those applications are, I'm not 100% certain. You know, we talked about briefly about what they might be, but those applications are gonna come, they're gonna suck, then they're gonna get real good, and it's gonna bring more, and it's just gonna compound.
Terraforming. We're just going to keep terraforming and breaking down the world.
Exactly.
And breaking
Jeff, what do you think?
I'm most interested in actually, you know, the use cases that are most exciting to me are ones where the user doesn't even know it's blockchain. And quite frankly, I think state channels are really cool. I can talk all day, they're fun. But at the end of the day, people will come if it's solving a problem. And there's a lot of problems out there, and if you understand blockchain really well, you'll understand what it's good at, what's not good at. And I think a lot of applications out there are using blockchains when in fact they don't need to. Blockchains are wonderful with multi-party, with censorship resistance, those kinds of applications. So I think the best use cases, the use cases are invisible to the end user, and that will bring normal people to this space. Because right now, there are very few normal people in this space. I mean, if you're in this space, you're abnormal, you're disruptive,
Calling us
right?
Yeah,
I mean,
probably true.
but we know that we need to get normal humans into this space as quickly as possible. So that's what I'm most interested in.
I'd love to know how you self-identify.
Yeah, I don't know. I mean, I know we're out of time, but the idea of like enterprise, and I think enterprise adoption is still 5 years away, maybe longer. So I think we should focus on normal people, solve their problem, build tools that they'll use.
Okay, Ty, last but certainly not least, markets.
I would say, I mean, I kind of say this a lot, but I think the thing I'm most excited about is just time, you know, and maturing charts. You know, from a technical analysis standpoint, it's just like, you know, the more time that you have on a chart, the more data you have, you know, the more reliable things become. Easier it is to trade, even easier it is to invest, you know, even if you just know a little bit, you know, just really quick for an example, like, you know, if you know TA and you know markets, like, you know, moving averages are pretty common, it's pretty basic, but they're also the most used by big money in the world, meaning the biggest money, the biggest funds, they still use the moving average. It's the most reliable, it's the most like concrete, you know, indicator that people use. So that they use. So if people can even understand that, you know, over time with charting, it can also, you know, help out just even in an investing standpoint as well. So, I mean, I'm just most excited about, you know, the charts maturing, because even last year on, like, you know, the altcoin rages and all those things, it's just like, you know, same thing. You know, people are doing 1,000% on day one, and I missed all of that. I'm like, the chart's a day old. What am I supposed to do with that?
It's 6 hours
It's like
old.
6 hours. The chart there's like 2 candles. Like, what am I gonna do, you know? So like, I'm most excited about, you know, just, you know, maturing markets in the charts.
Then there's less opportunity, but or less fast cash opportunity.
Correct,
Then
Chris. It'll become a little bit less
it's-
volatile,
it's a-
most likely, but that's
It's a
okay.
less volatile but more coherent market.
Yep.
Thank you guys so much.
Thank you.
Thanks, Emily.
That was awesome.